Gravy, welcome back, my passive income investors. I like to a deep dive review on what I think is most relevant this week in my over $387,000 dividend stock portfolio in an attempt to fast track retirement. And I have a goal before I'm 30 years old, damn it, to be getting to $1,000 a month in dividend income. And if that's something you appreciate, if it's a story you want to follow, consider hitting that like button, because first and foremost, this is my least favorite day out of the entire year when it comes to the investing community, because when you scroll on to Jeremy, let's say financial education, well, you'll find out he's selling his entire stock portfolio. Damn it, you go on to meet Kevin's channel and you're finding out he's running for freaking president, until you realize it's April Fool's. Clickbait, clickbait, clickbait. Where's the damn reality in this market? And your heart becomes immediately broken, because the reality is a surreal dream we're living in 2022 as the Ukraine begins bombing the oil depots in Russia. This is going to continue to kind of bleed into that story of why you should potentially be having oil exposure to some degree in your portfolio, something Jim Cramer's been talking about aggressively lately, because anybody that thought they were going to rely on cheap Russian oil, whether it was India or China, though they're getting a huge deal at the ruble exchange right now, it don't matter because it's not stable. Cheap doesn't mean reliable, right? Which means they're going to have to continue to lean into other countries and other places to get their oil, and this is further destabilizing Russia and this geopolitical event. That's why, some of these reasons are why I started investing in Enbridge. You really start seeing the prevalence of what oil is going to be in the next couple of years. I'm going to say the next 2 to 3, maybe even 5 years. So many of you know I bought into the largest oil and pipeline company in North America. It's been boding pretty well. Obviously, Enbridge, guys, I'm going to show you this in the actual portfolio, along with some of the other prevalent plays that I've been messing around with, like Alibaba. But before we talk about that, let's take a broader view of the market real quick, because it has been, what a ride, man. I mean, yesterday, the markets tanked miserably on growth stocks. Today, they went to the moon again, and now we're back down to being flat pretty much on the day. And it's just nuts here. I mean, it's crazy. This is why I've kind of started reiterating that story of dividend stocks, because with dividend stocks, I'm seeing a lot of discounted deals out there right now. We're going to talk about one in a second, but you kind of just not have to worry too much about this instability, right? Because you can just keep reinvesting those cash flows, where with growth stocks, I don't know whether we're going to be higher or lower on the year, but damn, it's something that a day trader is probably loving. But I made a video yesterday talking about 4 Canadian dividend stocks with yields over 5% that I think are worth buying today. And there's always one person when I talk about dividend stocks that will say, why don't you talk about options ETFs, whether it's XYLD or QYLD? And I'm going to be straightforward with you guys. I don't talk about these because they are absolute trash investments. Don't get me wrong, they do completely serve a purpose, and I'm going to talk about what that purpose is in a second, but why are you wasting your time on these stupid ETFs that largely underperform the market over and over and over and over again? I mean, look at QYLD here, and I mean, in the last, several years, it's down 16%. The dividend payouts are extremely inconsistent. I mean, they're all over the place depending on the volatility of the market, when realistically, you could have just bought a stock like Home Depot that's boring as all hell, isn't going to be paying you a 10% yield or 12% yield like QYLD is, but at the same time, it is up 105% still over the last 5 years, after dropping somewhere around 27% in just since the beginning of this year here, guys. And on top of that, the dividend yield in the last 5 years, this is one of the few companies that since 2017, let's just say the pure 5 years here, 2016, has literally doubled the dividend, going from like 89 cents to $1.90. That means if you were starting at a 2.5, you're now at 5%. And on top of that, not including the dividend, you doubled your money. This is why it's so stupid to buy option ETFs, especially if you're younger. But where I think they actually play a purpose in your portfolio is if you're at retirement or you need cash flow tomorrow. These things are cash flow machines, in my opinion, and they're great for paying bills, but they're pointless for making money. I mean, to rely on something that isn't exactly 12%, it pays a 12%. No, it doesn't. It'll pay anywhere from a 10 to 12. Maybe it dips into the 9s. Maybe it goes a little higher at some point. Nobody really knows because of the volatility of the market here, guys. So I hate it. I hate it when you guys comment about these stupid option ETFs. Are you 80 years old? Are you 60? Are you retiring tomorrow? Do you want this as part of a diversified portfolio? Then that's you. But if I want to make money, I want to outperform the market. So that's been my job here, guys. So not to throw you under the bus, but let's talk about what is actually doing pretty well for me right now, and taking a look at the actual portfolio here in my my corporate account, guys. Let's first and foremost talk about that Enbridge position, because I did buy it at all-time recent highs, at least the 52-week high. A lot of people are like, oh, you're crazy, and it's still boding pretty well here, guys, because we're up almost 3%. A very stable company. I mean, just generally, you don't have the fluctuation of the oil price, but I really believe they're going to be heavily using those pipelines. I think they're going to do great in a couple quarters. So yeah, it's been a pretty fun investment. Whereas my bank investment investments that I thought would just be crushing it this year are actually null. Royal Bank has pulled back since I bought it. Now we're back to being flat on that position. Algonquin Power, all of my utility companies have just been crushing it because of the infrastructure plays, the oil plays, the natural energy plays. Like all of this is just bubbling up right now in this market. So at least I have good diversification in my utility and energy exposure right now. But coming to the growth side of this portfolio, where I primarily hold all my growth stocks, we're not seeing a whole lot going on here, guys. Like I said, it's been relatively flat with a lot of volatility. I mean, first and foremost, many of you know I've been scaling down Tesla when it's been rallying up here to continue to add to these stable, like dividend aristocrat companies like McDonald's. That's something you're going to see me continuing to do moving forward in that attempt to get to 1,000 a month in annual dividend, or 1,000 a month, 12,000 in annual dividends. And yeah, like I said, guys, this is a market where growth is just going to be volatile as hell. And one of the biggest bets that I'm making, and this is a short-term bet by all means, don't do what I'm doing here, but many of you know I've been just gobbling up Alibaba stock because I think fruitfully it is well undervalued, and even for an undervalued fair value for the risk you're taking, it should be a $150 to $200 stock. So I'm betting in the next 3 to 5 months it's going to make me a lot of money. I could be wrong, but right now I'm up in this account 16.31%, up about $1,300, and then in this new position that I took on, dumped about 10K into it, I'm down about $805 or 8% since I bought it at $1.18, and I don't really care. I mean, if you're looking at this every day, you might care, but because I don't plan on selling it tomorrow, I'm just going to be patient with it because I think I've got such an absurd price, and we'll see where we're at in the next 3 months. Maybe we make money, maybe we lose money, but I've still got a lot of cash sitting around, so don't do what I'm doing here because I feel like people see people betting and they're like, oh, I got to do that. I got to put all my money in BABA. No, you should be buying things like Home Depot, guys. I really think Home Depot is an incredible buying opportunity here. I'm going to make more videos on these dividend stocks that I think I might start adding here soon because everyone's saying, oh, Home Depot's slowing down. The real estate market's in a bubble. None of that matters because there's a huge supply and demand problem right now everywhere I go, whether it's the US, Canada. Real estate is running up because there's obviously more demand than they can pump out new homes. And for as long as they're going to keep building a mass amount of homes over the next 5 to 10 years, Home Depot is going to be well needed. So even if they slow down, who cares? We're seeing Facebook slow down, Google slow down, Amazon is slowing down. It's just one of these cyclical cycles that we're experiencing after a big bull run in these markets. So I mean, I'm looking at this as an incredible opportunity for a great dividend aristocrat that has largely outperformed the S&P 500 consistently year over year. So these are stocks that I'm beginning to look at. I would show you guys the rest of the portfolio, but I feel it being irrelevant. I always show you guys the whole portfolio, but I'm just collecting dividends. Nothing's really happened, and I haven't been doing much trading or buying outside of those few positions. So at this point, I want to know what you guys generally think about where I'm at in my investing career, where you're at. I've been watching like Hidden Freedom Investing, who just crossed into retirement in his 40s. I've been watching people like PPC Ian and even people like Matt Money, who is only 30 years old with almost $1 million invested. And I always find it fun seeing how people evolve in their investing careers. And lately, I feel like I'm becoming much more conservative, but that again comes at the stake of watching the capital that I've been very diligent investing over the last several years grow into this mass amount of capital. But let me know what you guys think in that comment section below. Stay cool, stay awesome, and as always, I look forward to catching you in the next one.